Nestle products are part of our everyday life, from breakfast to supper. Today, we will show how the company behind this product report their financial performance using MFRS 8 and 134.
First, I will explain briefly how MFRS 8 works. For our first point, let's confirm the three core principles of MFRS 8. First, the most important one, core principle, this is the management approach. It means the financial report must show the business exactly how the management views it internally. We cannot just make up the numbers or the segments. Second, we have the CODM, which is the Chief Operating Decision Maker. This is just not one person. It's the function may be the CEO and CFO together who decide where to put the resources like money and asset, who checks the performance of each business and component. Third, this whole approach investors understand the business component, evaluate their risk, and forecast better. It makes the company more transparent to the public.
Next, I will explain question 2. Under MFRS 8, the CODM refers to the person or the group that reviews internal segment reports, make key decisions about resource allocation, and also performance evaluations. So, it is not based on the job title, but the function of reviewing the segment information inside the company. For the first example, we use Nestle Malaysia Berhad. The CODM for Nestle is the executive board. They review the performance of segments like food, beverages, and others. And also, they decide how resources should be allocated. This fits the MFRS 8 definition because the executive board receives internal segment reports and makes strategic decisions based on those reports. For the second example, we use Petronas Dagangan Berhad. The CODM here is the managing director or chief executive officer, together with the management committee. So they review segment results for retail, commercial, LPG, and also lubricants. So their decision on investment and operation are all guided by the internal segment performance reports. In summary, both cases follows MFRS 8 because the CODM is determined by who actually reviews segment informations and also make operating decisions, not by their job title alone.
Moving on to the type of report segment, which is products and services. This is Nestle primary basis because they manage their company based on the different type of food and drinks they produce. From the table, in the 6 months up to June 2025, Nestle has two big segments, food and beverage and others, like their other professional unit, for example, Nestle Profession, Nestle Health Science and more. You can clearly see the food and beverage segment is the biggest boss here, bringing in 2.7 billion in revenue. By separating the segment like this, we can easily tell which product group is performing well and which need a better strategy. Next, the critical part of MFRS 8, the quantitative rule. To make a segment officially reportable, it must pass the 10% rule. It only need to hit 10% of the total revenue, total profit or total asset. Based on the pie chart, Nestle Food and Beverage is almost 80% and the other segment is 20%. Since both are way above 10%, they must be reported separately. This is why Nestle only showed these two. After that, we check the 75% rule. This is the overall check. All the report segment must cover at least 75% of the company's total external revenue. Since Nestle 2 segment already add up to 100% of the revenue, the 75% rule is perfectly satisfied. And then we look at the second report type, geographical areas. Nestle doesn't use this as their main report, but MFRS 8 forces them to give this info as an entity-wide disclosure. This is so we can check their risk in different regions. The quote on the slide is key. It confirmed that Nestle has operation not just locally but internationally. Domestic sales record positive growth while export sales remain robust. So they are selling locally in Malaysia and exporting overseas. This shows us they are a big player in the international market and their revenue is not just dependent on one country.
Next, I will explain question 4, which is about the benefits of segment reporting under MFRS 8, using Nestle Malaysia as an example for this assignment. The first benefit is clearer segment performance insight. With segment reporting, users can immediately see which segments contributes more to the company's results. I'll give you an example. Based on Nestle interim report for the period ended 30 June 2025, the foods and beverages segments generated about RM 2.7 billion, while the other segments contribute around 700 million. So this helps investors understand which segments is the main profit driver. Also, analysts can easily identify strong and weak segments. For the overall, decision can be made based on the real segment performance instead of looking at the total numbers only. Next, the second benefit is better understanding of risk and the business environment. So different segments face different risks. I'll give you an example. for food and beverages is more affected by raw material price changes, while the other segments is more sensitive to demand trends and regulatory changes. By separating these informations, users can access the risk exposure of each segment more accurately. So in summary, MFRS 8 improved transparency by helping users clearly evaluate segment performance and also understand the specific risks faced by each business segment.
Next, I will briefly explain MFRS 134. MFRS 134 is the equity standard that guides how companies prepare and present interim financial reports, such as quarterly or half-year reports. The purpose of this standard is to ensure that users receive financial information that is timely, relevant, and reliable, instead of waiting for the annual report. Next, I will explain the key requirements of MFRS 134. For minimum content, an interim report must include a complete or condensed set of financial statements, such as the statement of financial position, profit or loss, changes in equity, cash flow, and not explaining important event. For reporting period, companies must present the current interim period and compare it with the same period from the previous year. For the statement of financial position, the comparison is made with the last annual year end. For recognition and measurement, the same accounting policies used in the annual report must also be applied in the interim report to maintain consistency. For disclosure requirements, company must highlight significant events during the period such as new borrowing, dividend payments, or changes in estimate. The main objective is to give users timely and updated financial information so they can make informed decisions throughout the year.
Move on to question 2, which is significant events and transactions that affect company's financial position and performance since the end of last annual reporting period. So, the first one is payment of dividend. The group declared and paid the interim dividend of RM74 per share as at 31st December 2024. The amount of interim dividend for half year ended 30 June 2035 was RM173 and 530 million. This declaration affected and reduced the retained earnings to RM376 and 831 million as at 30 June 2035. It also affected and decreased the total equity of the company to RM643 and 306 million for the half year ended 30 June 2035. Lastly, it will result in increase in cash outflow under financing activities during the half year period. The second significant events and transaction is higher tax rate. Group declared that effective tax rate for current quarter is slightly higher than the statutory tax rate. The tax rate declared was 24.5%. When the tax rate is increased, the total income tax expense will also increase, and the amount for the half year ended 30 June 2035 was RM88 and 148 million. This affect and decrease the profit after tax of company for 6 month period ended 30 June 2035. Lastly, decline in profit after tax will result in decrease of company's retained earnings.
Here, we can see the current and comparative interim financial statements of Nestle Berhad. This slide shows the reporting structure for the statement of comprehensive income, statement of cash flow, statement of financial position, and the statement of changes in equity. This highlights how the company presents both the current interim period and previous year comparative period. I will explain the detailed reporting period in the next slide. We can see Nestle Berhad interim statement of comprehensive income. The company presents its performance in two formats, the 6-month result and the 3-month quarterly result. For both formats, the current period is compared with the same period from the previous year. This allows users to observe both short-term trend and the overall half-year performance. Next, this is interim statement of financial position. The current financial position is shown as at 30 June 2025 and is compared with the previous financial year end, which is 31 December 2024. This comparison helps users identify any changes in asset, liabilities, or equity since the last annual report. Next is the statement of changes in equity. Nestle Berhad compared the 6-month period ended 30 June 2025 with the same 6-month period in 2024. This statement highlights how equity changed due to profit, dividends, and movement in reserve. Lastly, this is the interim statement of cash flow. Similar to the changes in equity, is compared with the cash flow for the 6-month period ended 30 June 2025 with the same period in 2024. This helps users understand how the company generated and used cash during the first half of the year.